Hi everyone. So yeah, everyone's talking about yield farming and ways to obviously it's going to get you super rich. Obviously the truth here is it's not going to. However, key thing is can it potentially unlock some doors for you overall in your life? I think so. So what I'm going to do quickly here is show you how I get into positions in yield farming and obviously potential things that you have to look out for when you're getting into new positions. So with this, what we're going to be doing is we're looking at Solano, we're looking at Orca, and we're looking to see how I would structure a yield farming position and if I was had to get into it right now today. So let's jump straight on over to it. So over here on Sol USDC, you can see here I have a few lines marked out on the map and or on the chart. And the key thing here to remember is if you pay attention up here in the top left, you can see the 1W. So this is obviously the 1 week time frame. Now, too many people get into yield farms and what they're focusing massively on is super tight ranges. Super tight ranges are going to give you massive yield, massive returns. However, they're going to give you massive losses and impermanent loss, divergent loss. The whole lot is going to hit into you there. And I think this is something that most people don't pay attention to. And I know I hold my hand up here on this as well. I am one of those people. A couple of months back, I was falling into this problem of getting into super tight ranges. And obviously, what ends up happening is you're just wrecking yourself. So, with this in mind, I zoom out when I'm getting into yield farming positions and look for potential areas of where I'm wanting to get into. Now, remembering again here, our key is to get into a position to obviously generate some cash flow for us to further build out. And like I always mention, and I mentioned it in my own group here at the moment, is I've discussed about this. And if we scroll down here, I've discussed about this entire process of what you're wanting to build out. And the key thing to remember here is if you're building out core pools, core tokens that you're happy to hold, obviously long-term mindset plan, this is key here. And I think this is something that you really need to pay attention to. So with that in mind, as I said, these are our positions. If we jump over to Orca here, you can see here this is actual pools at the moment. So most people get into something like this, 10% width in the range. If you can see it here on the right hand side, 5% here, 5% here. And quickly what I'll do is just drag myself over here so you can see it properly. So what you can see here is we're on the 5% width to the downside and the upside. And if we jump back over here to this position, and again, if I just roughly bring in one of these, more than likely you're talking 5% is around here, I'd say. And just double check it. So even up a bit higher. So 5% is around the 220. And then again, up is not even up to 250. So you can see there already that this position here is where roughly the green line is your range. Now you can see how quickly you're going to get knocked out of range there. And I think as soon as you get knocked out of range there, you're pretty much locked into either token. So obviously in this scenario, you putting in USDC, for example, you're going to be out of range to the up or the downside. You'll end up buying obviously more Solano, or you'll be fully converted over to USDC again after entering the position. And again, what happens is you're getting 0.7% per day, roughly. Again, this is obviously a vague estimate, but the key thing here is you're not going to be in the range for long enough. And what ends up happening is you're just going to end up being out of range and losing massively. So if we quickly bring up the calculator, wherever it is, so 0.73 multiplied by it's around 266% is an APR you're getting. It may look brilliant. It may, when easily when you're putting in €1,000 or $1,000, you're getting 200, 300 euros back. Problem is you're not going to be in the range for the full year. So what I tend to do is, as I said, is I get into these positions and look for wider ranges. And wider ranges has allowed me to farm for a longer period of time with tokens I'm happy to hold. Now, I think that's kind of a key statement there to fully understand that you need to be willing to farm tokens that you're happy to hold. I'm avoided this whole mindset of getting into tokens that I'm not willing to hold. So I'm just going to use an example here. If I'm not happy to hold Ethereum and I don't want to hold Ethereum, I won't necessarily get into farm positions that are Ethereum and USDC based. Or if I'm not happy to hold BNB, say, I won't get into positions. I focus on these high cap or assets, blue chip assets, because the key here is I think they have room to grow and they've withstood like obviously your bear markets and have traction behind them. However, there's always going to be instances when you have smaller tokens that are happy to kind of grow and will grow, and these are also ones that you can start building in, but you build them into your overall strategy, your overall plan, like I mentioned over here, and it's part of your overall goal. So on that note, as I said, we look for wider ranges. So most people get into it, as I said, 200 something percent, and if I bring up this quickly here, you can get 200%. Say you put in your $1,000 and you're in it for a year. On paper, it looks like you're not doing too bad. You're earning $5 per day. You, after the end of the year, you compound this entire back into a position. The bag has absolutely exploded. It's grown massively, and as I said, at the end of the year, you're up to $6,000? Yeah, about $6,000. So, or the final balance is 7,000. Sorry. So what happens there is it looks really good, but the problem here is that's not going to stay like that for the entire year. So more than likely you'll end up being out of range, in range, out of range, and you're just getting crucified. So what I like to do is bring it right back, focus on a wider range, because at the end of the day, all we have to do is get around, 10-20% in total a year. Most banks, most savings will offer you maybe 10% a year max. Stocks are around 10-15%, 10% say a year as well. I think the S&P 500 I think is maybe around 10% a year. Again, correct me in the comments obviously if I'm wrong on this. So with that in mind, I look for wider ranges. So if we jump over here again, you can see obviously we can go 10% to the downside, 10% to the upside. So again, I just refer to this as 20%. What I like to do is see, can we change this completely? So in this scenario, I'm just going to put in 200 and we'll put in 300. With this, you can see it's 0.17. I think that works out roughly 60% per year. Now, that means we have a range of almost 40% there straight away. Now, we can change this again because obviously 199 there is still fairly low, or closed up here. So what we want to do is maybe look at going a bit lower again. So again, what we can do here is we look for the chart, look for areas of resistance, look for areas of support. I think that is the key. So you can see here, it had a bit of resistance, had a little bit of support around this $200 mark. We could potentially push it down to around here, which is 171. Again, a little bit of resistance and support again. And as I mentioned here, if you can see it, we had this big green candle pushed right through it, came back down around this area. So again, this is potentially an area, and if we just kind of go over, you can see it back over on this side. Again, this had played an impact in Solana price as well. So again, we can bring it down to 180 and make it a little bit different. And then we can still have it at 300%. Now, as you can see, we're up to nearly a 50% range. And this is still going to be offering us roughly around, I want to say 40% maybe. So if I just quickly clear this. So it's 0.144. So it's around 52%. You can see it there on the calculator. Around 52% is what you're going to be earning for this. And even at that, that to me is still extremely high results that you're going to be getting. And the key thing about it is obviously we're going to be in this. Where's it gone on me? We're going to be in this for a long time. Obviously, we're hoping Solana doesn't drop obviously quickly in that. You're still only going to be earning on $1,000 is 142. Now, I suppose the key thing to remember here is when you look at it from this point of view, it's not a lot. And I know people out there will be looking at this and saying this is not a large amount. However, for probably 90% of the people watching YouTube and watching these videos, you haven't got 20, 30, 40, $50,000 to be putting into these positions. And you also want to start growing your crypto portfolio without actually having to put a massive amount of money into it. As I said, I've built my own portfolio from this exact approach. I'm going back years into masternodes when I got into it, and I was doing the exact same thing. You're earning a small amount and just building it and compounding and growing. And what ended up happening is you end up building up a portfolio of assets basically that are generating cash for you. Now the key thing here for me, and hopefully that I can help people understand a bit more obviously within the group, is you avoid all the mistakes I made. I got into wrong projects. I lost money stupidly in different things. And obviously we had DeFi come on the scene, which has obviously opened the doors massively, but gives us a lot more opportunities to kind of grow our overall crypto portfolios. And as I said, everything that I'm doing is built on trying to build it in a sustainable way, and obviously build it with certain amounts of capital. Again, as you can watch my videos, I don't have hundreds of thousands to throw into crypto. If I did, I would be putting some of it into it, of course, but not all of it. But the key thing here is you can see compounding, I suppose, at the power $1,000 into this range, and at the end of the year, you're going to earn roughly $681 in profit. Now, again, at the end of the year, your income has only gone up a little bit, but that 681 now is a lot more feasible, because I think Solana could potentially stay within this range for a lot longer term. However, if we go out of range, we're happy, because at the end of the day, we're happy to be building out positions like this. And if we use this kind of method to it, where you have your treasury, you unlock funds through borrowing and lending, you can eventually keep this entire cycle going. And obviously, the key thing is managing it and having plans and strategies in place. And again, that's something that I'm actively trying to work on within the group here and build it out. Now, again, look, as I said, I know I'm harping on about this now, group. I suppose you're probably thinking, shut up now about it. But as I said, this is the key here. This is what I'm desperately trying so hard to build out a community around, people that are active, passionate about building in the crypto space, and obviously wanting to grow it, and pretty much showing the other side of things. You don't have to chase the high yield, high APRs. Look to build strategies, look to build a system, and take full use of what's provided, what we have access to, because at the end of the day, the opportunity to earn, even in this case, as I mentioned, at the 50% weight range, we're still earning around 50% in APR. Even at that, you could half that again, bring it down to 25%, and you're still going to be getting a decent amount. So you can see how other people are doing it with maybe 10,000, dropping this down to 40%, and straight away, average daily income is $10 a day. That's what $70, nearly $77 a week, based on this, for pretty much just having a bit of your cash working for you. And you can really quickly start to expand this as you learn more about crypto, learning more about opportunities, and potentially protecting yourself. So look, I'm going to leave it there. Try to make it a bit of a shorter video, but obviously we went on a little bit here over it. But again, look, let me know in the comments what you think, and if any questions, and if you like me to cover any other specific content, specific type of content in relation to crypto, let me know in the comments, because I'll definitely jump into it, because I need to know more of what people want to see. So we're going to leave it there. Thanks very much for watching, and I hope everyone has a great day.